the rules are, actually get this little panel thing off, I just realized. If a stock hits the target percent before times run, I'm going to give you a target for the stop, the profit, and a time. So if the stock hits the target percent before time runs out, you can sell half your position or all of it. I usually pretty much do all and maybe keep just a small if I want to, but I'm not greedy. I like to make my profit and get out. So if you're new to this, probably the best thing to do is just if it hits the target, get out. No matter what the amount of profit or loss you have, when the last day of the seasonal occurs, you exit and close out the trade. Some of these will not hit our target. You may have a profit after the time period is up, or you may have a loss. It probably hasn't hit our stop loss, but you still may have a loss. So you have to just stick to the rules here. Follow each trade rules. Buy the day listed, don't buy the day before, don't buy the day after, or any other time date in between. These rules are from an algo that I have access to, and the algo has selected the best date for you to buy and sell. So keep that in mind. If the stock hits the stop, you close out the trade is over. I think we've had maybe one, maybe two tops that have hit the actual stop. I will tell you, because we are going to be trading directional calls on these seasonals, that consider the amount you're risking, consider the amount that you're going to pay for it, the amount, that's the maximum you can lose, but maybe enter the trade expecting to lose that amount, because sometimes if the stops are hit, there's not much left in the options value. So keep that in mind for when you're risking. So now let me show you a little more of what we're talking about, and these PowerPoints will be put up for you to review, but these are the rules for the seasonal trade. What I like about these trades is it's helping you develop discipline with your trading, because I'm going to give you an entry date, I'm giving you an exit date, I'm giving you a target to sell for a profit, and I'm giving you a stop to get out for a loss. That will give you the discipline and learning how to trade and develop these routines. And it will help your trading overall, and it will also build up your confidence. A majority of our seasonal trades have done really well, and it has made people very happy. So Research Mike last week is the one who brought up that he was hoping I would share some with y'all, and I wasn't sure, because we do focus on the money press mainly here if I should, but I decided that I would do two with you. I'll be honest, right now, not a really strong seasonal time. In about another 3 weeks, it is going to be heaven. But we still are in a little bit of the choppiness zone. So my first seasonal that I'm going to share with you is Microsoft. It has been a winner 81.10% of the time for the last 14 years. So, you know, it's not perfect. 81.1% tells us there has been losing years. So this is not a guaranteed shot, you know, by any means. But it, you know, this is what I like about seasonal trades, is they are a forward-looking, they're a more dependable indicator for you. So, you know, 81.1% odds for 14 years, I'm willing to take this. The seasonal time is on October 10th. We want to buy a single directional call near the close of the market. You need to buy it about the last 5-10 minutes of the day. We are going to buy either at the money or in the money call. Do not buy out of the money. If you buy out of the money, just go ahead and give me the money to take to Vegas to play in the casino. Out of money options, buying single directional calls just is a loser's game. I unfortunately have known people they think they're buying a cheap bargain, they're like, oh, I bought this call for 20 cents. If it goes up to $1, you know, I'll make all this money. Well, it's 20 cents for a reason. So I don't recommend doing that. I'm going to tell you the expiration date I want you to buy. I want you to buy, and actually I see a little error here, the October 27th expiration date. And we're going to hold this trade till October 20th. Now I've put on here when earnings date is. It's October 25th. So I suspect the reason this trade is so good each year is it's basically an earnings run-up trade. A lot of people will start positioning themselves for 2 to 4 weeks out before a stock reports earnings. And so I would say that's what they're looking to do here with Microsoft. Now we're going to take the closing price on October 10th and we calculate a 9% stop on it. And I have a journal for you that will do all of this. I'm going to show you in a minute. I don't even require you to do math. I make life as simple as possible for you. The target is 5.12% of the closing price on October 12th. So, you know, 5% on, that's not even 10 trading days, would be a nice little return. So that's the trade we have on Microsoft. I have one other one.
So you're saying buy on the 10th?
Yes, and sell on the 20th.
But your profit window is based on the closing price of that day.
Correct. Well, yes. And then I'll show you in like right after I show you the next slide, I'll show you the season. Well, actually, I'll just go ahead and jump. I have here a seasonal journal that I've already filled out for you. And I'm going to go ahead and jump to this as an example.
Quick question. You're buying the October 27th.
Yes.
Right.
The expiration date of October 27th.
I think they were saying it was showing the November 17th.
Yeah, I got to correct one of those. I thought I had it corrected on my old computer, but I think I opened the wrong one today.
So October 27th.
Yeah. And so I've had the October 27th here in the journal. You're going to get you'll get this blank journal, and all you have to fill in is these green box and the teal. You have to fill in the closing price on October 10th. You'll have to put in the strike price you buy, the number of contracts, because I don't know y'all's account sizes, and the premium you have to pay for this call. And here's an example. Once you fill in the closing price, which I just made up numbers here, 99, I'm pretty sure Microsoft is selling for over $99. Over here on the right-hand side where I have target, it will automatically calculate it for you. So if the stock trades up to 104.68, you could say 07. If you can set an alert with your brokerage account or your charting service, that's a good idea. And then they will alert you when the stock hits that price, and you will just go then and sell your call and you'll have a profit. It will also calculate the stop, which is at 90.09 for you, and you would set an alert for that. And if it goes down to the stop price, my rule is you must exit the whole position. The trade didn't work, and it can happen. I mean, October is the 1 month that we could have a crash. So keep that in mind. This trade could go south. Knock on wood, I hope it doesn't. And then, but that's all you have to do is put in the closing price, your strike you bought, the number of contracts and what you pay for it, and then you can type in your exit here and it'll calculate and show you your profit. I've got the stop amount up here in here for you, the average profit we're looking to do, the seasonal time, October 10th through the 20th. If this trade does not hit the target or the stop by 10:20, you will sell at the close on 10:20.